Do US businesses need Quebec payroll accounts separately? Why Quebec is its own story? Quebec often plays by its own rules, and payroll is no exception. A US business that hires employees in Quebec quickly discovers that the province runs its own income tax system and social programs alongside the federal ones. That means a separate set of accounts, remittances, and forms beyond the usual federal payroll program account. You are not dealing with one government, you are dealing with two. If you think of Canada as a single payroll jurisdiction, Quebec is the exception that proves you wrong. Federal payroll accounts are not enough. When you register for a federal payroll account, you get the ability to withhold and remit federal income tax, CPP or QPP-like equivalents in some cases, and EI. For employees in most provinces, that one registration is the main gateway into the system. Quebec employees, however, are subject to provincial income tax that is administered directly by Quebec's own revenue agency, not by the federal authority. That means a US business paying Quebec employees cannot rely solely on its federal payroll account. It also needs to register separately with the provincial authority to handle Quebec income tax, withholding, and other provincial payroll contributions. Quebec income tax and social programs. Quebec collects its own personal income tax and runs provincial versions of several social programs. Employers must withhold Quebec income tax from wages in addition to federal tax and remit it to the provincial authority. There are also Quebec-specific contributions linked to parental insurance and sometimes other funds, depending on payroll size and industry. From a foreign employer's point of view, that means more than just one extra form. It means parallel remittance obligations, parallel returns, and parallel reporting at year end. If you only set up the federal side and ignore Quebec, your payroll will look incomplete from the province's perspective. Quebec Pension Plan versus CPP. Employees in Quebec are generally covered by the Quebec Pension Plan rather than the Canada Pension Plan. As an employer, you contribute and withhold according to QPP rules when your employees are in Quebec, not the standard CPP rules that apply elsewhere. That creates yet another layer of separation between Quebec payroll and the rest of the country. If your payroll system is not configured to distinguish between CPP and QPP, you can easily miscalculate contributions and end up with shortfalls or overpayments that have to be fixed later. Registration and accounts in two systems. So yes, US businesses that hire in Quebec almost always need separate payroll accounts. A federal payroll account for federal deductions and a Quebec account for provincial income tax and social contributions. The registration processes are different, the forms are different, and the online portals are different. You end up with two sets of credentials to manage, two sets of remittance calendars, and two sets of year-end obligations. For a foreign employer, this can feel like running payroll in two countries at once, even though it is all inside one province. Year-end slips, T4s, and RL slips. Year-end reporting in Quebec is also split. Employees typically receive both a federal T4 slip and a provincial RL slip that together reflect their income and deductions. The employer is responsible for preparing and filing both sets. If you only issue T4s and ignore RL slips, you have not completed your obligations for Quebec-based staff. That dual slip reality is a practical reminder that Quebec really does stand on its own when it comes to payroll. Why you cannot treat Quebec like any other province? For US businesses, the temptation is to treat Quebec like just another province in the Canadian expansion plan. From a payroll perspective, that is a mistake. Quebec requires separate registration, separate calculation rules, and separate year-end work. If you are planning to hire only one or two people there, you need to be honest about whether you are ready to take on that extra layer or whether you prefer to cluster your first hires in provinces that follow the standard federal pattern. None of this means Quebec is a bad choice. It just means it is not a plug-and-play extension of your existing Canadian setup. Final thoughts. US businesses that hire employees in Quebec do need separate payroll accounts. A federal payroll account covers federal deductions, but Quebec income tax and provincial contributions require registration and ongoing compliance with the provincial authority as well. That means two systems, two sets of remittances, and two sets of year-end slips. If you want to map out what a Quebec payroll setup really looks like next to a standard rest of Canada setup, you can explore more detailed comparisons at www.theaccountingandtax.com. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.